All right, here we go. It's lunchtime, Friday. Let's talk about the market because mortgage rates have bottomed. Everybody's expecting these mortgage rates to keep coming down. It looks like at this point they've bottomed. Partially. Kind of clickbait, kind of not. Let me walk you through it. At this point in time, because of the inflation report that just came up, where inflation went back up to 2%, there is a very, very, very good chance that the Bank of Canada is not going to do the 0.5% decrease of the overnight rate come, I think it's December 11th or whatever the next rate hike is, or rate cut is. I'm so used to saying hikes because we had so many previously. So it looks like we may not and likely won't get the big cut that we were expecting, another big cut. And that's because at this point in time, there's just really no reason to. I think we still need to get the overnight rate down, but back up to 2% inflation. I think that's probably on its own enough data to have the Bank of Canada go, okay, maybe we shouldn't keep these monster cuts coming. It's probably the right thing to do. So that in it of itself, though, is not actually what I'm going to be talking about mostly here today, because the overnight rate only applies to variable products. Often confusing. If you watch the channel, you're probably like, yeah, I know this dummy. But if you're new to the channel, besides subscribing and clicking the like button and all that stuff, you may not yet know that you should not only do that, but that these two different rates are completely detached from each other. So let's talk about that. First off, the Bank of Canada is trying to get their overnight rate, or the rate that they have, what's the right word? The rate that they have control over. They're trying to get that down to a neutral rate somewhere between 3 and maybe as low as 2.25%. They called it, so between 2 and 3%, usually 2.5 to 3%. They view that as the neutral rate, where you're not adding inflation, you're also not stimulating the economy. That's where they want to get to. Currently, well, let me hop you in here and I'll show you exactly where they're at. This is the Bank of Canada website. So currently they have dropped. Now we're at 3.75. So there's likely, let's call it another, there's a 1.25 to 1.5 coming off of that over the next year. When exactly, we don't know. Let me know when you think. Let me know if you think there's going to be a 50% cut still, even after the 2% inflation number, after inflation went back up. Because if we look at inflation compared to rates, so this blue line here is the rates up and down, and the red line here is inflation. So you can see now they're both trending downwards, although the inflation one is not under anybody's control, so it does go up and down. It's not exactly correct unless this is adjusted after the fact, because just not that long ago, inflation wasn't actually 1.6. Inflation was 1.9, and it wasn't 2, so it was kind of in the middle. But that's about the trend that's there. Okay, so that's the overnight rate. That's what the Bank of Canada gets to pick. So I think we're going to continue to see that go down. But why do I say that rates have bottomed? Well, that's because right now, people are not taking variable rate products. There's a really good argument that you should take a variable rate product, but people aren't taking variable rate products. They're taking fixed rate products. The reason they're taking fixed rate products is the rates are lower and you can qualify. You can qualify because of the stress test. You can qualify better. If you take a fixed rate product, you still might be qualifying at 7.5%, maybe 8%. Right now, on a fixed rate product, 3 years, you're probably qualifying just around 6 or 6 and a bit percent. So you can qualify for a lot more home, and it's a safer product to take. Excuse me. Leave me a comment down below, by the way. I'm going to get, or is it a chat on the side? I don't know what it is for a live stream, but I'm going to get to question and answer period here shortly. Subscribe to the channel, all that stuff. But let's keep going here. Let's keep on topic. The fixed rate mortgages, they have bottomed. I don't think we're going to see anything less than where we're at now. And likely, I think they're going to start going up here pretty quickly. That is because they are tied to the bond market, and the bond market is heavily tied towards the U.S. economy over top of, say, what's going on in Canada right now. Let me show you exactly why I think that's the case. So the bond yield is spiking. Look at this. We're going way, way back up. So let's go back. Can you see it behind my fat head here? So about a year and a bit ago, we had those 6.39% 5-year fixed rates that nobody wanted. It was mayhem. I thought if the market was going to stay there at 6.25%, you would be qualifying at 8.25%. You would have seen the market crash. You absolutely would have seen the market crash. I think you would have seen another 20 or 30% off. Bond yields since then dove around, let's call it January last year. You could get a 5.09 rate. 5.09 5-year fixed rate was actually really good after looking at 6.39 or whatever you were looking at. Then you kind of bounced around. And then in the summer, now into this fall, the bond yield just crashed. Rates are coming down. The economy is doing poorly. Rates just absolutely started to tank. And that was a good thing. It's going to save the market, as we call it. So they did come down quite a bit. And 3 weeks ago on my channel, I put out a video that said, go break your term now and refinance, because I think it was CIBC and a couple other ones, a couple other banks were hanging around between 3.99 3-year fixed rates all the way up to about 4.19. It was a really good rate compared to the 6 and whatever you had before. So you pay a $5,000 penalty, you save $5,000 in your first year, you shorten your amortization, and you lower your payment. It was a great thing to do. That time may have run out, specifically now, because the closer we get to today, look at these bond. This is why I'm doing this live right now. You can see the bond yields are just spiking. So as this happens, what you're going to see is those 3.99 special rates, or even a 3.89 maybe at a special bank. Those are all going to go away. This continues. This trend continues. Those are all going away. We're going back up to about 4.5%, maybe slightly above that, if this continues. Obviously, it's a fluid chart. It's always changing. So it's something to consider there. But at this point in time, it looks like we're going back to about 4.5% rates. Going to be super interesting to see if indeed that is the case. So that is the big difference between those two types of mortgage products. Get back out here. So you have the variable, which is coming down. You have the fixed, which appears to have bottomed and be going back up. So that's the overnight rate versus the bond yield. The bond yield right now appears to be being driven by the fact that we have a new president coming into the States. That's probably a business-friendly president, let's call it. And that's going to drive their economy, which will drive up the bond yield, which will make fixed rates go back up. This is what should happen, by the way. We should have fixed rates above variable rates. So we're starting to see things normalize, except not quite yet. The reason it's not quite yet is because we still have variables that are being handed out at 5.5 to 6.5%. My line of credit right now, HELOC, I think it's 6.45. Now, something to consider about that is this is not the only way mortgage rates come around. There is something else on the variable side that people don't think about. They don't think about it often. They just go, my variable rate. They think a variable rate is a variable rate is a variable rate, but that's not how it works. What happens is when you go to an institution, depending on the current situation, depending on the current, how many mortgages they want to sell this month, they may start discounting their rate. So the overnight rate set by the Bank of Canada, then the bank will have a prime rate. Let's say if the overnight rate is 3.75, prime is, 5%. Something like that. Let's say it's a percent higher. Let's say it's 4.75. Then on how bad, whether or not they want to. I'm not a mortgage broker, so I'm probably destroying this, but basically, however much they want to sell in mortgages, they start looking at, okay, is it the prime plus 1%? Like, for instance, most HELOCs right now are prime plus 1%. So if prime rate's 5, your HELOC's 6. So that leads me to believe that prime's usually about 5.5 right now, and then most HELOCs are 6.5%. Your variable 5-year locked-in mortgage might only be prime plus 0.5. But let's say, for instance, you do take a 6% variable right now, and you sign on at prime plus 0.5. Well, as we drop another 1.25, whatever it's going to be, you're going to get down to about 4.75. But when the interest rates start being handed out by the bank, they might be prime minus in the future. So you could have a prime rate that's at, let's call it 4%, and then the bank really wants to start getting rid of or selling some mortgages, get things moving. So they start going prime minus 0.5. So now the variable rate could shift, even though you both have variable rate products, somebody that got it right now and somebody that got it a year from now, the exact same product, technically on paper, one's prime plus, one's prime minus, you end up with a difference. So it's going to be very interesting to see over the next little bit, because I think we're going to probably end up at a spot where you have your variable rate somewhere around 3.5%, maybe 3.25 to 3.75. And then your 5-year fixed rate, if we're lucky, we're going to get down to 3.79, 3.89, but I don't think that's going to be the case. And I think we're now going to kind of regulate between about 4.19 and maybe it might go up to 4.59. I think that's probably where we're going to be for the next little bit. As long as it stops spiking. If this continues to spike, the chart I just showed you continues to spike, we're going to see fixed rates go up quickly. And then it's going to make a whole lot of sense to go to a variable. But that means that you should probably be going to the variable now. Something to consider. So I think if you do lock in right now, there's a good chance you're going to get something like a 4.25%. Not bad. It's going to take a lot more rate cuts. It's going to take you, if you're on a variable right now, it's going to take you at least, let's say, 6 months or more to get to that rate if you're lucky. So something to consider. Now, if you do see the banks offering a variable rate product and then giving you that discount, like prime minus a whole point, take that all day long right now, because it's going to look absolutely amazing in the future. I am going to get to questions. I don't know if there are any. Oh, there's a few comments. No questions. Do I see questions? I see a question mark. I'll get there very shortly here. So please go ahead and comment there. I want to try and get to those as soon as possible, but first I'm going to show you a couple of things going on just in the marketplace, so you can see, if you are in Surrey, the Fraser Valley area, you can see exactly what's going on out there. So I showed you the bond yield spiking. This is why 5-year fixed rates in particular are going to be going up as long as this trend continues. This is why variable rates are going to continue to go down. I just don't think they're going to continue to go down that quickly. And the reason is because of this news article that came out this week. Can I see it behind my big head there? Canadian inflation back at 2% ahead of the year-end interest rate decision. Now let's talk a little bit about the market. Now, I love to look at this. I show this on my channel all the time. November, we've had almost 1,800 listings. That's down from October, obviously. November is just a less busy month, but still up from last year. But look at the sales. Sales are actually tracking very much on pace with October, and they're way up from last year. So the market is turning our corner. I didn't feel this way personally in my business. So we started off this year with a bang, absolute bang. But March, let's say April, May, and June was deadsville, absolute deadsville. July, it picked up. Everybody seems to feel like August and September was really, really bad. We didn't experience that in our business. But let me tell you, since July, basically, our business has been gangbusters again. Thankfully, we're in a position where, we're doing more transactions than we were over the previous years. 22, more than 23. Obviously, we're not in the craziness that was 2021. So that's where we kind of stand at the moment. Multi-class search shows you how much standing inventory is on the market. We are now continually slowly dropping 5,727 active listings on the Fraser Valley marketplace right now. And maybe I'll show you what prices have done. So we've seen this real leveling out. Now I know this looks like crazy high spikes, and obviously this was a high and this was a low. But let me guide you in here on 3 years, particularly the 1 year. I mean, we're really starting to even out here. These numbers are huge swings, but overall, percentage-wise, are actually a nice kind of calm market compared to what we saw back here with this crazy run-up. I mean, this isn't this dissimilar right now in the marketplace to kind of when the market cooled off after foreign buyer and for the next couple of years after that. So that's I think good news. I think good news for everybody. Hopefully we don't see all the craziness. And hopefully none of that stuff comes back. All right, let's see if there are any questions. If there are, great. If there are not, I've said my piece. I think you missed your opportunity. There might be another week. You probably missed your opportunity to refinance, get out of your big rate mortgage, get down to something lower. I think you should do it if you haven't done it already. Actually, there's probably a link below this video somewhere to connect with my folks over at Citywide Mortgage. Maybe check with them, see if they can get you out of a tough payment right now. Okay, let's get into some comments. Talk about your trip to Toronto. Why? My trip to Toronto, nothing. I went to Toronto. It was Toronto. Same. Always the same. Rains a lot less in Toronto. So if I just bought a house back in July for a 3-year term, should I cancel and get a new rate now? I don't know if you should cancel and get a new rate now. You absolutely, July, probably not July. January, yes. You should definitely phone your mortgage broker and find out. You probably have to switch banks if you do that. But canceling makes a lot of sense for a lot of folks right now. There are many of my clients, even friends, family, and coworkers that are looking at doing that right now and are in the process of doing that right now. It is a very good, I can even think of somebody, there's a $5,000 penalty. Their payment's going to go down $175 a month, and their amortization is going to shorten by 9 years. And they just renewed their mortgage less than 12 months ago. So now they're cutting that, getting into a lower rate, and getting all the benefits. There is a $5,000 penalty. However, they're going to make it up very, very quickly. Okay. Okay, hang on. $120K a year, $9K a month, pay stubs, 750s, $9K a month pay stubs, 750 credit score is not the highest bracket of credit. 760 credit score is a higher bracket of credit score. 250K down was only approved for 730. You have other payment problems. Together, including my down payment, why was I given so less? This was last week. I owe nothing as well. Oh, okay. So if you owe nothing, there you have something else going wrong. You've got either bad advice. So if you're making 120K a year, well, that's probably not actually that bad. You're only going to get 4 to 5 times income. So, no, that's right. That seems about right to me. If you're going to get 4 to 5 times income on 120K, $500,000, no, that's bang on. You got good advice. 120K income with 250 down is 750. That is 120K now, by the way, is a good income. It's not a great income. A lot of buyers we're working with are making 80 to 90, and there's at least 2 of them. And then even more people we're working with are making 6 figures, maybe multiple 6 figures. There are some big incomes out there. Really, really tough for the folks that are grinding, making it work. But there are some big big salaries going on out there. When do you think condo prices in Toronto and Vancouver will rise? Do you think maintenance fees will continue to increase? Yes, maintenance fees will always continue to increase. I've been thinking about doing this. I just know it'll get no views on the channel. Maintenance fees, I don't think we've seen the big increase in maintenance fees yet because they're going to lag with budgets. And last year and the year before and the year before, inflation is going to eventually add up. Maintenance fees, though, right now, people don't understand what they are made up of. That's why I was thinking about putting a video out on the channel about it, because it's mostly insurance costs. And insurance is a big issue right now. I can think of 5 or 6 different buildings in downtown Wally right now that are like between $2,100 per unit and $4,500 per unit after your maintenance fee per year to insure on the owner's behalf. So the actual insurance for the whole building, it's a problem. A lot of these buildings, as soon as they open up, somebody, a landlord puts in a tenant. Maybe they weren't the best tenant, or maybe they just had an accident, but they seem to happen always in the first month of occupancy. Tenant floods a bathtub on the 37th floor of a brand new high-rise, floods the entire building. And next thing you know, a building that's a week and a half old has a $250,000 deductible. Absolute tragedy. It is what's happening out there. I am never going to complain about maintenance fees because I've been on stratas. I know how hard it is to balance a budget. I also know what you're paying for, and I think most of them are pretty worth it. It is tough, though, when you start getting into the big units. You're starting to see $9,000, $1,200 a month maintenance fees because you have one of the 2,000 square foot units and there's 400 square foot units in there that have a 400 fee. So that's really, really tough. When do I think condo prices will come back in Vancouver? Toronto, you got to talk to my buddy Tom to find that out. I don't think they're coming back quite anytime soon just because they've built so much junk. And I don't mean junk as in the quality of build. I mean junk as in nobody wants to live there. They're just building like little studio apartments, and it's just not cool. Let me see if I can just check out Vancouver here real quick. Vancouver's not doing bad. The Vancouver condo market is not terrible. I'm going to log back in here. Bear with me. And there we go. Okay, so this is HPI. So this is all. Let's go just to apartments. So the red line is Vancouver, and the blue line is my area of the Fraser Valley Real Estate Board. They're not doing bad. They've kind of hung around. I mean, you never had the crazy peak in Vancouver, right? Everybody was fleeing the city during the pandemic. So you had a run up, but look how close these lines got. And then you had the Vancouver market kind of even out. And then the Fraser Valley market is the one that crashed after the fact because people were moving to places like Chilliwack and that sort of thing. This is actually amplified when you go just straight into detached. Look at the big swing. See? Vancouver is now still going up. People don't realize the peak of the market in Vancouver for the longest time was July of 2016. Took till this year to recover from there. So condo market, Vancouver, not doing bad. Toronto, I think it's going to be a while, but Toronto's such a speculation-based pre-sale crazy market compared to Vancouver. I know Vancouver's expensive, but it's not nearly as crazy as those kind of micro units that they're putting up absolutely everywhere. Surrey, though, on the other hand, is seeing a lot of that stuff, and I think it sucks. I think micro units are no good for anybody. And that's showing like in an area like Wally right now, where you have like 17, 18 months supply of one-bedroom condos. When the market goes bad, an area like Wally is terrible to be in. When the market's good, an area like Wally is great. But at the same time, we are starting to see for the first time downtown Surrey, Wally area renting for more than the other areas. Used to be the rougher area. Now with all these folks that have come to Canada, usually new to Canada folks that can only rent, maybe they got their PR or they're on temporary work visas or permits for studying or whatever, you definitely are driving rents up because you're close to the train. So maybe that's good news for Fleetwood and Clayton and Langley in the future. Do you think recent immigration policy changes will continue to put downward pressure on real estate prices? I'm used to hearing increased population. Here's the thing. Increased population being bullish on the market. Here's the thing. With how many times can I say here's the thing? With the immigration targets being slashed, there's still 1.5% growth per year after you look at all of the different ways people are coming in. So sure, we had a target of, before the pandemic, 275,000 people per year. For the last 3 years, that's been 475. So now they're cutting it to 385. Okay. So we're just being slightly less responsible or slightly more responsible or whatever you want to call that. It's still probably way too many people, and it's still going to be increasing. We should never have been increasing at 2.5% per year, but 1.5% is still a big increase. So I don't see it. I see interest rates being the bigger factor right now. And now you've got this crazy thing happening where foreign students are now applying for asylum. Asylum is its own kind of issue because usually with asylum, I know because I've rented out, or I haven't rented out, but I've had people applying for my own units on asylum salary, people fresh from other countries getting paid by the government to be here. That's not healthy. It's not healthy for everybody. Maybe for them, the individual, but it's not healthy for everybody else. So I don't see it being as big of a factor because we're going to build less homes. I know the government came out and said, we're going to build 38 bazillion trillion homes in the next 10 weeks. Net less homes than ever before seem to be being built this year. And next year's going to be even less starts. So I don't know if you listen to the podcast channel. If you listen to the podcast channel, the Tom Story Show, we went over last week what we did after seeing a presentation by Benjamin Tal. And Benjamin Tal, a banker at CIBC, not a real estate agent, an economist, chief economist at CIBC, came out to, mind you, a group of realtors and said, listen, the opportunity, particularly he was talking about condos in Toronto, particularly. He said the opportunity is now, buy now. He's like, I'm not sure where the next 6 months is going to go, probably down. I don't know where the next 6 months after that's going to be, but 2026, he's like, hold on to your hats. So that seems to be his idea. He seems to think there's buying opportunity. He literally said you need to leave this conference, go call your clients that have been thinking about buying an investment property and tell them now is going to be the best time in the coming 5 years. So that was very interesting to hear. Would you say strata fees go higher for detached homes for subdivision? What strata fees? Would you say strata fees go higher for detached homes for a subdivision? I don't know what that means. There's no strata fees in detached homes. Well, I guess there's some bareland stratas. Or would they plateau at some point? My strata includes city utilities. Okay, so maybe you're a bareland strata. Bareland strata has very, very minimal fees. City utilities is another big one that's in. So, for instance, in the city of Surrey, if you have your utility bill in your strata fee, they can look artificially high. So you buy another unit that's got a lower fee, and then you get that bill from the city for $700 and whatever dollars, $785 or whatever it is. So you've paid more. So think about that. I am going to let anybody that's on right now, I think there's something like 50 people on right now. So if you have any more comments, drop them in here. Otherwise, I'm going to let everybody get back to their lunch and their weekend. So drop a comment in. I just wanted to, again, talk about the fact that I think rates have bottomed for fixed rate products. So if you can get anything with a 399 or to a 429 and you're a fixed rate person, you should probably secure that for as long as you can right now, because unless something changes, Those rates are probably going back up. The variable rate's going to go down, but it's not going to go down as far as you think, particularly if you're already in a prime plus type of variable rate mortgage. Somebody says thank you. Oh, you're welcome. Somebody that wants to let me know that they enjoy my videos and the podcast. Keep up the amazing work. Thank you. There are more people like you out there that say nice things to me like that than there are in the YouTube comments, of which I constantly pile on them. So that's it. The market's doing pretty good. I think rates are going to go back up, and I highly recommend right now that you talk to somebody. If you are in a high fixed rate mortgage product, please talk to somebody. If you start with 5+% right now, be talking to somebody, and you may want to look at a short 3-year, and you may even want to start considering variable. It's a possibility. Anyway, thank you so much. Quick live stream, only a half an hour. Look forward to seeing some comments and some wonderful people that are saying nice things like they are to me right now down there. So leave those on the regular video so we can counteract all the people that just crap on me all day long. Thank you so much. Have a great weekend.